Welcome back to our Monetary Policy Special. I've been speaking with SBI Chairman Dinesh, Khara, former MPC member, and I am Kozhikode Professor Mridul, Saggar, Samiran Chakraborty of Citi, and Neeraj, Gambhir, the Group Executive Treasury and Wholesale Banking at Axis Bank. Gentlemen, thank you for staying on with us. Mridul, when is the next cut, you think?
I don't think this will happen in this fiscal, probably into the next fiscal. I would be rather surprised, but it all depends on how much is the seasonal correction in food prices. So if food prices surprise down, such a thing did happen in the past 2 years. But if it surprises on the down and there's room, obviously the central bank would like to take it. But I think there is too much sort of disruption going on for us to believe that food prices would fall significantly, because there are other elements which are coming up, even if tomato corrects.
Okay, so do you think that April would even be considered by the government? Because we would have a lame duck, sorry, not government, by the RBI, we would have a lame duck government. There is a reasonable possibility that ahead of the general election, some kind of income transfer schemes are announced. I mean, last time the NDA returned with 330 seats. Even then we had a Garib Kalyan Yojana, 6,000 rupees being given to every farmer family. So income transfers is par for the course in an election year. Do you think, therefore, April is tough? Lame duck government, why not wait for the first full budget? Won't the MPC think that way? Mridul?
I think it ought to think that way. It would be a vote on account. We won't have clarity on what the government is doing, really. So the central bank would also probably be in the same dilemma. So I think there's case to hold the rates unless we see growth significantly fall or inflation being well anchored, inflation and inflation expectations. Then there's obviously a rate cut case. But fact remains that in this hiking cycle, we didn't go far. You look at how other central banks have raised the rates. There's a big difference between what the RBI did and what most central banks did. And inflation remained high, but not significantly high in this duration.
That's a fair point. So not a very high hiking cycle, and therefore possibly a delayed and shallow cutting cycle as well. Samiran, your best guess? First cut?
I mean, we've discussed some of the points, but one aspect also is that by April next year, we should start seeing the global growth numbers being cut down more aggressively. In Citi, we expect the 2023 growth to be about 2.4%, but the 2024 growth to be only 1.6% global. Now, that sort of a backdrop might suddenly change the tone of the discussion and make the April rate cut also possible. Although we have acknowledged that given this inflation bump and uncertainty that we are seeing, the risks of it getting delayed further have increased. I think the other key aspect would also be that to what extent, as we were discussing a while back, the RBI would be comfortable in hiking rates in a quarter where their own, if the actual forecast materialize, actual inflation is averaging 5.2%. Is that going to be a good enough quarter for them to consider rate cuts?
Yeah, absolutely. Going into April policy, all you have is a February number, which is more likely to be 5+. Would you really have the courage to cut or even the justification? Neeraj, what is the range you think the 10-year moves from now to December? And if I can push your courage, even the fourth quarter, I mean, would you think that we have enough upsides?
No, I think we're dealing with a whole host of uncertainties here, both domestically as well as globally. Besides inflation, there is crude oil prices, there is geopolitical risk, there is what Fed does next and at what point in time. So I think for now, the market is well anchored between 7 to 7.25. I would say about 7.15 to 7.35. But if any of these variables go in the opposite direction and the inflation does surprise us on the upside, I think the market will possibly inch towards 7.5. So that's not my base case. I think I'm looking at about 10-15 basis point volatility for now. Depending upon how the overall macro environment plays out.
So 7.1 to 7.3, you're saying?
Yeah.
Okay, that's very rangy, really, if it's only that much.
It has been quite rangy for quite some time, actually.
Yeah, absolutely. I mean, more so the rupee, which is why I'm sacrificing that question so as to get to the growth question to Mr. Khara. So how is the demand for loans? I mean, even now, it is like the capex cycle is going to recover. People are not speaking in terms of a gush of projects. And liquidity is still reasonably comfortable. So do you see a great demand for loans that can push up yields?
Well, I think different segments of the economy, there is definitely visibility of the demand. It may differ from various segments, but I would say that broad base, universally, it is demand is very much there. Corporate, we have started seeing some positive trends in terms of the new projects, which are where people are showing interest. In any case, the new growth levers like renewable, etc., there is a scope for further lending. SME, we are seeing very clear demand coming in. Likewise, even in retail as well as in rural, there is a very clear visibility of demand. So I think it's there, but is it at a peak level? I think we'll have to wait and watch. But nevertheless, there is a very cleir visibility.
What I heard from the smaller banks is that there is undercutting by the bigger banks when it comes to lending, that they force us, to give better rates because they are ready to cut. So it didn't look like the yields were going up in terms of the cost of capital. But Mr. Khara, what about this complaint over home loans? The governor almost seemed to say that by elongating the home loan EMIs every time the rates go up, the banks are even camouflaging possible default cases because you don't want the EMI to rise and therefore be faced with the potential default. Is this going to be a tricky one? When the rules come, we don't know what the rules are.
No, of course, there is a system to engage with the borrowers and explain to them both the situations and eventually go by what their options are. This is normally the practice which is followed by banks like ours. But I would not be in a position to comment about the practices being followed by various other banks.
Okay. Fine. Finally, I wanted to ask you this, but this perhaps not really policy related, but a very interesting public tech platform that they are talking about, where they are able to give, at the moment it's a pilot for Kisan credit cards or Kisan loans, which is end-to-end digitized. You must be an important participant in this pilot. Are you getting a sense that we are going to have much better credit evaluation, much faster credit? Is this, can you tell us anything about this project?
I think when it comes to it would be faster credit dispensation. Evaluation will be incorporated into the decision engine will be there in the loan management system itself. So evaluation as it is will be more standardized, I would say. But yes, of course, dispensation, credit dispensation would be much faster. So it's moreover, it will ensure much better convenience and much better underwriting and also frictionless delivery.
I'm asking you because if it succeeds in Kisan credit cards, what the governor seemed to indicate is that it can be stretched out for all small loans, end-to-end digitized. So do you think there is a grave, a very serious possibility, a good possibility of the bottom of the pyramid getting a lot more loans?
Yeah, it is. In fact, that is the intent when this particular project is being tried out. And of course, the outcomes of the project will be evaluated very carefully. And thereafter, scaling up, of course, would require some bit of a time also, so that all the ecosystem players should be on board on this.
Okay, well, those are the small things that RBI always drops in the monetary policy, the interesting things which make the economy much more productive, increase productivity. But those discussions for another day. It's been a pleasure speaking to all of you, Mr. Khara, Neeraj, Samiran and Mridul. Thank you very much for giving us more understanding about the economy and the monetary policy.